Hello, everyone. It is a good evening tonight. I hope everyone's having a good weekend and has had a good week in the markets. We're going to be reviewing week 26, and this is halfway through the year. So I just want to give myself and everyone else a big round of applause, and you should do it too. Because guess what? You made it halfway through the year, and you still get to wake up every day and look at the charts. How fun is that? I was being factitious. It is boring sometimes, but nonetheless, these are the trades that I took. As first one on Monday, where we found something in the afternoon. But I found something in the afternoon, which was pretty nice. And then I took a loss on Friday. Doesn't happen to me that often, but Friday was a losing day. Was able to realize that I made a mistake of buying the manipulation, right, which manipulated lower, took me out. I was liquidity for smart money, and I knew that. I didn't try and short and reverse it and go the other direction, revenge trade. I instead maintained the same leverage, had an even tighter stop. I was already using low leverage in the first place, but got in at the turtle soup when I realized that this was manipulation, and then had a nice run back up to these highs to kind of trade above these relative equal highs. I was willing to hold it past to see if it would give me a couple extra points, but it was really kind of teasing me a little bit up here, and I just decided to I explained it throughout the video, but this was a small scalp that I took. And I want to talk about Friday because there's a lot that happened Friday that there was way better opportunities, first of all, to be found. And I mean, I'm sure I could have found a better opportunity on Friday. But I want to talk about, exactly why. Because it's not usually a time that I trade ahead of the 9:30 open. Right? And I couldn't trade after 9:30 that day. In fact, there was a lot of, some of the days in the week where I couldn't trade. Not a lot, but the days where I would have wanted to trade, where it was highest quality, I wasn't able to. So we have week 26. We're going to start with the weekly analysis. Okay, so Sunday we're going to start with the calendar. There wasn't much news this week, and this is one of those news where, one of those weeks where there is not much to do because there's not much news. Then obviously there was a lot of panic in the beginning of the week. Monday and Tuesday were really nice days to trade because of all the panic in the market. I mean, the amount of articles I would see. I follow this one guy who basically is like a reporter for YouTube community, and he has his own kind of community, and he interviews a lot of people, talks a lot about China and their debt and what's going on over there, and the United States is unsustainable debt path. And he was releasing 3 videos a day of just different people saying how the markets are crashing, and then there was articles everywhere talking about the crashing markets. My own mother and my brothers told me about how the stock market crashed. And my boss at work said, "Is this a good buying opportunity?" And so I mean, well, if anyone wants to know what I answered to that, it's not financial advice. I just told them what I'm doing is, I'm not willing to buy anything until September or October. Because that's when we're more likely to start to see when we're more likely for me to start to see more favorable conditions where we've placed in a low, and then we start to go back up again. But we had the ISM services PMI, which came out positive, right? Actually more positive than they were expecting. And we had the 10-year bond auction Wednesday at 1 p.m. and then Thursday unemployment claims. And so Tuesday was really, you should have been a bad trading day because of all the hype around, not really hype, but all the looming fears about a big recession and a big market crash and the carry trade in Japan going on. It was still a pretty good day, and then it kind of died off the rest of the week. So Wednesday morning was pretty bad. Thursday I couldn't trade Thursday because I was gone all day, and Friday too was gone all day, so I had to trade early on Friday. I couldn't trade early on Thursday because of the 8:30 unemployment claims. And yeah, so let's get into the weekly analysis. So I talked about how we have an immediate rebalance on last week's candle, and now I'm looking for further lower weekly candles, and we should not trade back to last week's high. I don't know what this is. Now, obviously, if I take you over to, well, I'm not going to, but if I were to take you over to TradingView, you would see that what I'm looking at is the weekly candle, and it's closed higher, obviously, but we've also wicked down so far to one of the sell side liquidity levels, or close to one of the sell side liquidity levels I was watching. The point where we can understand why it closed higher. It created such a down move that it had to kind of relax a little bit and come back up, right? So I'm okay with seeing that, but overall, I think that we're still sort of making those lower prices, and now that we have relative equal lows on the weekly chart, like we wicked all the way down to this level, we could maybe see it be revisited after a short-term retracement, and then just run it later. But that immediate rebalance, the idea should be that we shouldn't come back close to this area, right? So we're creating, let me just show the weekly chart. It'll be way easier because my mouse is on my other screen and I know you guys aren't seeing that. So we have this fair value gap there, and that's what we've kind of created. So there's still a lot of things that can resist price, and overall I still think that this was still a pretty bearish week with the amount of lower prices we did. So we kind of played out this weekly bias. It's just that we did it so quickly that we retaliated, and now is starting a different idea that could have been for the next week, but instead happened at the end of this week. But anyways, if you understood anything I just said, the next month's contract for MQZ 2024, these are just some targets that I'm looking at once we really start to get down here. This is obviously the December contract, the next contract that we're going to be trading once this one expires in September. But I'm looking at if we're going to make a low in September or October, this is where this could reach. There's this nice area here that's completely open. It's like a volume imbalance on the weekly chart, and I like to see those get filled. So I really like for price to come down here and completely fill that, and then it can start to look to go higher. And underneath that, there's only fair value gaps. Down here is a balanced price range, but this area is completely left open, right? So there's that gap there in price, and we haven't the big gap here left from this high down to this low has not been balanced on the way lower. So you see how if you drag out this entire gap from this high to that low, we've found support on it here with this low, but we haven't actually traded through it and then delivered to it both ways, and we also left that gap there in the middle. So if we can come back through that, maybe find some support on some fair value gaps in time, that's something I would like to see, an idea I'd like to look at for sort of a target in this current bearish leg until I start to see higher prices or a market shift higher. I spelled Asia wrong, but would like something like this, form a daily fair value gap and use it to continue seeking lower later in the week. I will study particularly the Asia Open on Sunday and examine what price does. So I wanted to see Asia kind of open and start to go lower, and then Monday to kind of form this daily fair value gap here, come back into it, and then continue going lower. Now obviously that didn't happen because Monday just ended up, well, it kind of did for a little bit as resistance, but it didn't seek lower after forming the fair value gap because Monday had already seeked that much lower that we didn't need to go any lower yet. So as soon as kind of Monday really started to fall, that bias was kind of invalidated, and there wasn't really much else for me to do throughout the week, which is also why I kind of turned out well that I was working a lot this week and I did less because there wasn't much to even do, right, according to my weekly analysis. The Dow does have liquidity voids; it can fill lower. So now the Dow is even more. It looks even more like it wants to fill lower liquidity voids. And if we can get the Dow to really drop and catch up to the Nasdaq, where it's going to start to lead in lower prices, and Nasdaq can start to then lead higher prices, and get back to a bullish market, this is where I would want to see the Dow really start to go down and sort of really catch up to the Nasdaq and the S&P, and to come down here and fill those areas. And let's go to Monday. So this is the big long week I was talking about in the daily chart. Price was insanely volatile, and we moved lower overnight by over 1,000 points, and ran back up into that range. What a day! So yeah, 1,000 point move lower, and then we come right back up, and like 700 points back up, to start to leave this big wick, right? And this is again off the news over the weekend about Japan hiring interest rates and the carry trade. Japanese capital starting to move out of the stock market, along with fear that from investors to move out of the stock market. And so this is kind of like the reason for that red light. It's panic. It's also a good buying opportunity. I mean, yeah, after I saw all this panic and I saw this low being formed in the wick, I was absolutely no way I was going to be bearish for the rest of the week. I was looking for a retracement to go long, right? And this is what happened. But as you see, as we come down here, we get SMT between the S&P, the Dow, and the Nasdaq. So down here at these lows, you see the S&P and the and the Dow make a lower low, while the Nasdaq makes a higher high. And then, most importantly, note this high, it closes way above it. It doesn't just come up above it, close just slightly above it, and turtle soup, and then it violently goes the other way and inverses fair value gaps. No. It refuses to trade down to this gap, leaves a breakaway gap as it really continues to displace way higher above that high. That's a change in market structure. So we have a short-term market shift where we're now in a bullish delivery. We're in a delivery higher. Okay, so what am I looking at if we're going to deliver higher? There's a new week opening gap, which was left open. There's constant encroachment of the hourly wick. And then there's even higher new week opening gaps and new day opening gaps that weren't filled, that and regular trading hours gap that is unreasonable to be traded to, but I'm still leaving them on my chart just in case we get the scenario where this is a low and we do start to go back up towards the all-time highs. But that breakaway gap was kind of left open. It was a little bit suspect, so we've also left a short-term low, and so if we start to trade back up to these highs and we don't displace through them like we did back here, I could anticipate a short-term raid on these lows because they look very suspect, right? Just above that breakaway gap, it'd be perfect for them to just run down to them, trade into the breakaway gap, kind of create that sweep on sell side liquidity, and then reverse and go higher. Okay, and as we get into the 15-minute time frame intraday, the area highlighted in yellow was completely filled by the wicks and had no need to be traded back into. So as I saw her trade back into the range ahead of 9:30, I knew we would draw higher, right? Price, because I said that it had no need to draw back into that yellow range. So as I see it start to show that it wants to do that, and obviously, it's no longer bearish, it's going to go higher, and I'll explain why in a little bit. But price ran through the range quickly. There was no manipulation that I trusted to long with, and I instead waited for the afternoon lunch trade, right? And this is what I was seeing in the morning on Monday, is that we had this manipulation lower where we actually failed to swing down to this low, and we rejected by going higher. And I know even ICT even talked about this that morning too, and it was very encouraging to see that ICT was talking about that same idea that I was talking about, on my analysis. But as we wait, hold on. Okay, sorry, I'm back. But as we fill in completely all these candles, this is an immediate rebalance. I mean, you could say it's immediate rebalance, right? But because it is immediately rebalancing this candle, but not in the sense as in it's going to trade lower. This is completely balancing these candles in order to leave no, resistance, no fair value gaps. Kind of like a hint of price tipping its hand, saying, okay, well, there's nothing to trade to in here. It's completely balanced. So if we start to trade back to it, since there's no gap to resist price, it's just going to go straight through that range. And it's going to be very quick doing so. And so it was very quick doing so. 9:30 opened up, made one more small run lower, and then ran higher aggressively, way past this high up here, leaving that, I don't know why that's the breaker. It should be this up close candle, or this one. Or, yeah, I don't know. But comes back into this. This would be a mitigation block. So I don't know why it's a breaker, but it should be a mitigation block, not a breaker. And then it continues to run higher off of that, or start to make an attempt to a new high of the day. And all this is happening beneath midnight open, right? Which isn't very well represented there. It's a little off. Sorry about the small mistakes, but all this is happening beneath midnight open. We're in a very, very much oversold condition. And so even though we have sell side liquidity down here, we're still very oversold. And the fact that we failed to trade to that sell side liquidity near that low shows that this is one of those instances where retail support and resistance ideas is actually going to work, and we're going to instead accumulate a bunch of orders down here at these levels near that sell side liquidity low, that's 17,346 or 320 or 30, whatever. That whole area is going to accumulate a whole lot of orders, whether it's limit orders waiting to buy this support, or it's sell stops, or people trying to sell the break of the support. Whatever it is, there's going to be a whole lot of ideas and money down here that we can come back and grab in the future. So I do suspect that this will not remain intact, and it will get rated in the future. But the 9:30 open was a little bit not too obvious, because we don't really have that 15-minute PD array that is shown, that works really well. We have an order block that forms, and we close here, form this down close candle, which becomes an order block, and then we trade beneath its low and its close. Now we're in a big discount compared to that order block, as we're trading beneath a short-term 5-minute low. But there's not really a traditional breaker setup, and like the manipulation really just happens on a higher time frame, where this would be more of a time to look for a day trade, to really hold it throughout the whole day, and not just some quick moves according to my model, right? But nonetheless, as we come up above that order block, we do start to use it as support once we get back above it. So we have that super oversold one as we're beneath this down close candle, and then as we get above it, now we should be remaining in that overbought condition and not go back into this candle, as long as we still have a higher time frame draw that is higher. Right. So in the afternoon, the trade that I took was a similar idea. So we made that high, and then we moved past this low to initially sort of shift the market. Now, I didn't think this was a turtle soup, because as we're coming up here, we're kind of consolidating. This could have been a short-term sweep and then turn into a turtle soup, and back in the afternoon to resume the morning uptrend. Very possible. But because we consolidated a little bit and we found resistance on the higher time frame 15-minute order block, okay, I identified a 5-minute breaker where it ran the 5-minute short-term high on the stops. I identified the midnight open, how we were above it, how we had taken liquidity already, or moved back into the range, and then I decided to go short to target lunch lows down here, which we displaced through and seek lower on the 15-minute bullish breaker. Okay, and that is the trade execution. I waited until we rejected from the 15-minute order block, until we really showed displacement, because I wasn't comfortable shorting up here. And then when we really showed that displacement, still above the rate I was looking for, I got in. You saw me take profit a little bit early because how fast it moved lower, it moved like 60 points in like 10-15 seconds of time, and I was only in the trade for not even a minute and a half, and I just took profit too quick. But there's no such thing as too quick. I mean, I took profit, and that's good. At the end of the day, it's profit. But yeah, I could have held on to it longer and fulfilled the idea that it's going to trade the midnight open, and I could have made a little bit more. It was actually not 60 points. It would have been 70 points, 73 points if I had held it to midnight open, but it was actually just 40 points that I held it instead, closing around down here, not where I have my mouse around here. So anyways, that's Monday. That's all nice and done. I know this is going to be a very long one, but it was a very big week, so hopefully if anyone's watching, you're sticking through it. If not, then I will have to stick through it in the future. So Tuesday, the 6th of August. So above is a screenshot, I don't know what I mean by above, of the daily chart after close, and okay, I'm talking about above this one. And below is a screenshot at around 9 a.m. Prices did not move at all today and moved sideways. I expected this because we had no news and price had already dropped so much. Therefore, this was an easy to anticipate and didn't look to do too much. Right, so we see how we just kind of moved sideways on the daily chart. That doesn't mean the price action was bad though. Price action was really good. It's just that we targeted intraday liquidity instead of targeting higher time frame draws, because we already did a higher time frame draw. So we had an inside day, well, not really an inside day, traded previous day high. So what do I see? In the morning, we've come back up to that new week opening gap where we ran out the buy side liquidity at the high of the previous day, and then the high of this current day, right, which is relative equal highs the previous day. You can look at it like that too, and Asia session highs. I noted how the morning saw a short-term low be ran out, which led to a market shift higher in the 10 o'clock hour. So I'm talking about that low down here quickly being ran and then leading to higher prices towards the buy side liquidity back to that new week opening gap. And we're having a lot of trouble displace through and then fill that new week opening gap though, but I do want to see it filled here. So I was not fully convinced on lower prices, which is why I had that breakaway gap in mind, the short-term low here. And I was wanting to see a run into that breakaway gap, and then maybe we can clean up all these relative equal highs that we left up here with Monday's high, this short-term high in Asia, and then the high here in the afternoon New York session. So 9:30 made a nice Judas swing lower before reversing. We see some of the levels that supported price in each of these moves lower and higher. Note the Judas swing. Lower forms a 15-minute bullish breaker, which can be used to look for longs within. So I'm talking about which Judas swing am I talking about? Lower. So I'm talking about this move down to that sell side, right at 9:30, which completes it. Trading beneath a short-term low, and then there is this kind of wick of the order block that can be used, and then you see consequent encroachment gets traded to very nicely, continues to run higher, and again displacing above the buy side liquidity, but sort of kind of giving the idea of shorts. And this is where you might think it's total soup, but because we have the higher buy side liquidity and we have a bias to fill that new week opening gap, we don't want to be going short here. We're also beneath the midnight open, so it's better to look for longs. And then we continue to run up to the midnight open where we start to reverse, and we have a nice reversal pattern. The same thing with that short-term low being ran out before delivering lower in shifting market structure. Now ask yourself, where was the most violent move? And I think it would be in the afternoon, because in the afternoon it pretty much immediately rebalanced, refusing to trade into this breakaway gap, was above midnight open and did a quick reversal from the new week opening gap back down to, you could have looked for some of the morning stops, right? Or the regular trading hours gap, I guess, where 9:30 opened up, and that's pretty much where it went to. But you could also just went from 0 to 100 and then take 50% at equilibrium and then just targeted the discount area of that range. I love how the 5-minute BISI supported price higher within that 15-minute breaker, and that was formed by the Judah swing. This was easy to spot. Price respected it well and ran higher nicely. And this is once you have your 15-minute level and the 15-minute run on short-term lows. Like take the exact same thing. My model is from 15, 5, and 1, and apply it to a higher time frame like the 1 hour, 15-minute, and then 5. Where instead of using the 1 minute chart to enter, you're using the 5-minute chart. And so you see a nice, quick institutional order flow entry drill there as we run higher throughout the morning above the previous session, well, the current high of the morning, and then further on to run out the current day high. It was also a market maker buy model. It would have been easy to take part in this despite the sideways price action. After this plays out, because we expect to chop and go sideways, I would be done and out of the markets. Right, so we had a really nice consolidation with a sharp move lower, which created a breaker. Notice how we initially run up above this consolidation, and then we run below this consolidation. But as we're running above the consolidation on the lower time frame, we're creating this breaker setup where we get beneath it and then use it as resistance, and we run that out, and then we quickly use these fair value gaps as support, quickly going higher, leaving some order blocks, and respecting the order blocks as we go higher. And we get an immediate rebalance scenario there after trading to a 5-minute short-term low, which continues to run higher, way past the buy side liquidity, right up to the Asia session high or new high, current high of the day. So I would recommend to study the market maker buy model that happened on Tuesday. Look at all these levels on your chart and even try and add more levels, because there's a lot more things I could write on my chart, a lot more order blocks I can show, more runs on liquidity, more breakers, but obviously I only try and show the important things. But you'll see how the more you start to annotate your charts, at least from my experience, I start to really see them form more often, and they are almost like just pop out of ease at this point. But I'll do Wednesday, and then I'll finish everything tomorrow, because Wednesday wasn't too big. But Wednesday we had the daily chart, which wicked lower from the new week opening gap. Right, so we saw that big wick lower from that new week opening gap after completely trading through it. But on the daily chart, this is still open. The wicks do the damage, the bodies tell the stories, where the bodies are still way lower. So we still have unfinished business higher. We have a lot of liquidity left higher too. But remember that there are still new day opening gaps and regular trading hours gap from the last couple of weeks left higher that were not filled. On top of that, a lot of people are talking about a stock market crash. My mother even told me the stock market is crashing. Even my little brothers, this is all fear. Fear creates volatility, moves price. A retracement to deeper premium is on the table, and we have news tomorrow. So also, if we do see a retracement to deeper premium, like way higher, a really big bullish day, this also creates a lot of strength, and people may believe we've put in a bottom, which accumulates even more liquidity at these relative equal lows on the daily chart. But you see how we've traded above that buy side liquidity, below that sell side liquidity. We still have relative equal highs left up here, managed by the, or not managed, but control, the delivered by the algorithm. This choppy sort of sideways price action where we had an absence of news and volatility because of all the dying down alarms or dying down fears of a big market crash. Once it starts to move again, people might think that it's coming back, and then they start to put money into the markets, and that starts to move the markets again, and then that's when you can start to buy and look for good opportunities right as we're in a discount beneath the sell side liquidity into a higher time frame level that I had been watching all week. So that would have been a really nice trade to take, like on a higher time frame swing basis where you're holding through the rest of the week. But we run up to the buy side liquidity, which creates this hold on, this is Tuesday. Okay, so this is around 9:30 where we create this Judah swing, and then a nice reversal 15-minute bearish breaker, which brings us lower. Now, why do you think the morning was very hard to trade? I mean, you see that 9:30 kind of makes that run higher, but doesn't really move lower. I remember I was watching this and it was taking forever to go lower, and it was very very poor. In fact, I'm maybe I'm remembering wrong, but I think I might have streamed. No, I did not, because ICT would have been streaming. But it was very poor and it was failing to make that high, and I knew that we were above the buy side equity and we were likely to go lower. It's just that I wasn't seeing. No, hold on. I think I did stream. Yeah, that's right. I did stream. Yeah, I was talking about how I wanted to see lower prices after this run. I was anticipating this run higher, which is pretty obvious. Everyone knew it was going to run up the buy side liquidity. It's just that the run lower, I wasn't trying to predict it, even though I was wanting to see it, because it was just very choppy, and I knew that since there was so much movement. If you watched my live stream, I noted how there was so much movement in the Lund session, the ASA session, leaving this huge range of the day, which created this kind of choppy price action in the morning. Before what time did it really start to run lower? Around 12 o'clock, right? In that 11 o'clock hour when the London session closed, and then the New York just went short, and went short really all day until we hit the previous day low. And we've also delivered to that new week opening gap, higher and lower, right? And so that's when it's completely filled. Notice how the bodies are being respected by that new week opening gap, or new day opening gap, sorry. And then it's continuing to drive price lower as it's wicking away from that 15-minute bearish fair value gap. So there was three good opportunities, I guess. Well, the second one wasn't the best, but the first one was during London. You can start to see that sort of 3 a.m. run higher after sweeping that short-term low. The second one was in 9:30 open, or maybe lunch session would be better. And then the third one was during the last hour when price ran out that sell side liquidity. Let's take a look at each of those, if it would let me. Unfortunately, I cannot always command it to let me. But taking a closer look at Lund session, I saw how clean it was. We have a run down to initially rejecting the new week opening gap before consolidating a bit around equilibrium. Right at 3 a.m., the turning point, price draws up above a short-term buy-side liquidity pool and down to a pool of short-term sell-side liquidity inside a bigger 50-minute fair value gap. So going back here, you see this is the 50-minute fair value gap, constant encroachment 50% of that. You draw that out and it hits that, the random buying pressure starts to buy from there. As it's clearing that high, running down to clear the low of this kind of range that was created at a certain time where price is likely to reverse and manipulate and to go the other direction until 6 a.m. And then we get the London move gets finished off at 9:30, which opens up and sweeps liquidity higher. I mean, that's perfect. Right there, that is, you couldn't ask price to get better than that. Right? Like if you had gone up at 3 a.m., I know I would have found good trades. Particularly the short here, as we run up above that short-term high, which is consolidation, right inside that 3 a.m. hour. And then we get a big expansion lower. We find resistance on that fair value gap, and we run down to that sell side liquidity. Now, we run up very high into the range, but one thing I don't like about when I look at this quick move lower and this quick move higher is it looks like a Mark and Baker buy model, but it's missing a lot of structure. It's just very quick down, very quick higher. And as we come back into here, we retrace one more time to show a failure swing. I didn't check, but maybe there was SMT. Let me actually do that. Yeah, so there was no SMT with this low and that low. But that's okay. We don't need SMT. SMT is just a cherry on top. The body, is what matters. The open and close, and then the high and low. And that structure within those hours you're looking at, that's what's really important. But you see this sort of candle come up and leave this big wick at 3 a.m. and it's coming right back down to sort of create a nice body on the higher time frame, failing to actually continue past this low. And what does the next candle do when it opens? It quickly starts to deliver higher to form this order block. So if maybe I go back on the hourly chart and look at how this looks on the higher time frame. On the hourly chart right at 3 a.m. You see what I mean? How we run down very quickly, manipulating on the lower time frame. You see how we have that wick up, but then we fill that wick with a body. we get beneath that wicking beneath the low, and then we close at the low. As we come way back up and then way back down, this leaves a nice order block, which price then smashes through that, shifting the market structure violently to the upside. Continues to run higher to the previous day high. Right, that was, I mean, it's pretty clear. So I mean, as we come back down, we find more resistance here at that fair value gap. We come back down, we form a nice candle. Now we have a bit more structure to play around with. Right? I noted how here it was just a really quick turn. There wasn't any, the breaker. If you're looking at this manipulation, the breaker on the 1 minute chart that's visible would be from that low to that high. That's way above where you're trying to get in for longs, right? Way above this low there. And so you're looking for another breaker to potentially form as this run is higher is playing out. And so it gives you another opportunity as it's coming back down here. Notice how the down close candle here doesn't get respected, and we keep seeking lower to create this breaker. We find initial resistance on this order block, which could, you could see that as a supply and demand zone or whatever. And it doesn't work, because initially it does work for a little bit, but then it runs right through it because the algorithm on the higher time frame is looking for higher levels. Right, so we get that institutional overflow entry drill as we create this nice and big fair value gap that doesn't get filled, not even close by the bodies. As it's creating this order block, this down close candle above that fair value gap, that's a really nice buying signature, at least that I find. And we continue to go higher, finding later support on this previous resistance area here, which is the fair value gap. Continuing to run higher to where? New week opening gap. And also notice that where did we reject from before this London move higher? We rejected from new week opening gap. So it's shown that we initially traded into it. She said no, not yet, and then we come back into it and we're a little slower. And then once we really fill it, she's like, okay, now you can really fuck off and don't come back. Don't call me back this time. I'm gone for good. So as we, let's ignore the lunch because it's not really the best. It's not really any 5 minute short term high or low to trade to during lunch, but in the afternoon we have a nice 5 minute short term low, which creates a little bit of consolidation. We sweep lower initially, then we sweep higher. Now both sides of the markets were purged, and we start to find resistance on that 50 minute higher time frame for value gap. As we really run back down, finding short-term support on the new day opening gap, but then we run back down sell side liquidity. Know what time this happened at? 3 o'clock. How do you know if the final hour of the day is going to move? If there's still sell side or buy side liquidity that hasn't been traded to yet, then it's very possible to see an excited run to finish that off before closing, and that's what we saw there. So that would have been a really nice trade to take in the last hour. After we run up that 5 minute short term high, you wait till you see a really obvious signature of a fair value gap, of price really showing its hand. Like here it's not showing its hand. Here it's just slightly going lower. Yeah, it inverts the fair value gap. It's just slightly going lower though, nothing to worry about. And then bam, as soon as the price really starts to run lower like this, then it's going to be fast and it's going to go down. And so it does go down. But if let's just say you were to buy back into here and suffer the consolidation, you see this whole order block from that low to that high resist price the whole way, right? So you could still find algorithmic ideas into taking part of this move at a much earlier time inside the last hour. So you do have to wait till it's like 10 minutes before market close, getting into that, and it might be a little bit unsettling, but it does run very quickly. And so that's it for Wednesday, and I'll resume the rest tomorrow. Okay, so I'm back. It's a new day today, and I'm doing finishing the weekly review. I just have Thursday and Friday to talk about. So I was talking about Wednesday, walking through how I may expect, another run up into that new week opening gap to completely balance it on the daily chart and kind of move through it. And so we did that this day. We moved up through that new week opening gap, and then we moved down back through it to completely balance it out. And so Thursday would have been a really nice day to swing trade, find a really nice day trade from London session. But unfortunately, or like early morning, but unfortunately I was again gone all day. However, I wouldn't have taken a trade anyway, and I'll talk about why. Price ran up today from an order block created in Asia. See how we immediately open up, we make a move lower underneath the short-term low into that breakaway gap, and we reject it. Right? Note how we reject it, how violently we reject it, and where the body's close. And then the next body trades down beneath the order block, underneath the close of it. That's a big discount. And then it quickly runs up above it, and that is quick to run there. It's very quick here, and it continues to show strength. And so you know that immediately right now at that time the market's in a buy program. How long it's going to last? There you go. We retrace time of the day in London session. We kind of make a short-term high, and we start to retrace, and we make a low during that London session, a turning point probably around 3 a.m. where we make that low at the order block, and then we start to run back higher. The 8:30 news pushes price higher towards that buy side liquidity. This is one of those where you could have gotten in ahead of the 8:30 unemployment claims, and then seen price, the news, deliver your price towards the liquidity, right? Basically trading the news. But you can see how, if let's just say you never looked at the economic calendar and you just traded what you see, you can see how even though there was news, it would have played out perfectly aligned with what the algorithm was doing and where it was targeting and what I was anticipating. So we get the 3 a.m., which, yeah, I was right, runs down, has that turning point during London. So late London sweeps this low, right, which has initial run higher. Now this probably got people into longs, probably got people into early longs. Over here isn't really convincing for an early long, and then we sweep that as manipulation, and then we start to run higher, then until 8:30 news, which the volatility just gets unleashed there, and it runs up. And notice also how we get to a discount inside the order block, and so this would have been a really good buying opportunity over during London. All right, at 9:30 open, then retraces into that large fair value gap to then continue going higher. I wouldn't have looked for any longs here because we're above that midnight open. And so you can measure this fair value gap there and look at about 50%, which it came down to hit that 50%, the consequent encroachment. Refusing to go back into any of this price action because it's completely balanced. But just my rules say, wait till, try and position yourself beneath the midnight open. And then, the trade I would have wanted to take would have been from down here during London to run it up, as a bias towards this high of the day, and then see it break through it, and then continue going higher. But fortunately, I don't trade that time of day, and I don't trade ahead of the news. So I waited till after the news, and I was working, and even if I wasn't working, I wouldn't have been comfortable taking anything. But another thing is, now if you go down to the 5-minute, you kind of look at that move lower to 9:30. There's not really much clear consolidation and like a 5-minute short-term low like there was down here. There's not really a nice move higher, and then you really see the obvious manipulation. It's just a simple retracement, which quickly forms that down close candle price, then trades beneath that low, and then quickly runs back above that candle. That's a buying opportunity. You could be buying the strength here, expecting it to go up to the buy side liquidity. That could be somebody's model or somebody's trading plan. I don't know, but it's not mine. All right, and then Friday. Now Friday, there was no news. It was after the news, and honestly, I was again going to be busy. But I did take a trade in the early morning. I probably shouldn't have. I should have waited. But I did want to see lower prices, and it just kind of chopped around and didn't do anything, right? So I was kind of trying to frame what I would have looked for Friday if I was able to trade. And it was to retrace back into 50% of this range, or the maybe 75%, and just kind of close out the week away from the high. But instead it just chopped around and it continued to target higher. But here I say very much seeking short profile. We rated London highs and lows in the morning, so you take London session high and low, and you see how we ran up above it, created a new day high, and it ran back down beneath it. So this was at that point where I was determining my bias, and I determined my bias, around 7 a.m. Usually I wait until 9 a.m. and I get a really way better idea once the New York session has sort of started to print. I get a much better idea at 8:30 exactly what the day's gonna do. But at around 7 a.m. I had this idea that we wanted to seek lower, and I stayed with it because I wasn't trading anymore. And then I failed to notice that as we traded beneath this low here, we did not displace and move away with speed. I was actually trying to long in this candle there, and it did work for once, and it failed. The first trade was lost, second trade was win, but I'll show the trades. But I failed to realize that because we just wicked down there and we were refusing to leave with distance and speed to really show that there's a market shift and it isn't just a quick run on liquidity. It ended up, because I didn't see that, I ended up having that wrong bias where, I wasn't trading at all that day, but other than early that morning because I had to be at work all day. But still, I was surprised to see it come up and trade back to a new high when I checked the charts at the end of the day. Okay, but really Friday there was nothing really to do. It was just seeking to short day. You shouldn't have looked to trade. The week had already moved so much, and in my opinion, it wasn't really much to do. I liked very much a move that played out this morning to run lower. I chose not to participate due to being uncomfortable trading this early in the morning, and after just getting on the charts and having to rush through my analysis to take this. It was a really nice move lower that ran quickly to London lows. The 15-minute PD array, which resisted price, was in a premium above the midnight open too. As you see here, as we take the day's high, we have London session, the day's low, still as liquidity that can be grabbed. We're in a very big extreme. The ICD says that the best trades will form at the previous day's highs and lows. This was one of them. This was a really nice trade where we had this inverse fair value gap. We had this order block there. Price moved away from it, came back, was finding resistance off of it, and then it hit that 15-minute bearish fair value gap and really expanded away from it. Right after, on the smaller time frame, you'll see that we had this initial drop, which could have gone people in and then manipulated above it, and then we continued going lower. So this would have been a really nice trade, but simply what I'm saying here is, when I got up at around, I remember exactly, it was like 6:57. I got out of bed. I had went to sleep pretty late last night because I was working, and I had maybe like 5 hours of sleep, so I was pretty tired, and I didn't want to rush. I remember seeing this, and then I looked down to my window tab, and I start to think, okay, I'm gonna open trade of 8, but then I need to get my password, then I need to type in my username, and then I need to make sure the risk management is set, and then my take profit and sell limit are set, like I know where I'm gonna put them, and all these things. I just didn't want to rush to open it and take a bad trade, and so I said, you know what, let this one play out. I don't want to take something where I feel like I need to get into it. So because of that, I'm gonna let it play out, see how it does, and if it plays out well, I'm gonna try again. In the future, I'm gonna try again. When there's a different opportunity, if there is one, before I get to work, and it was gonna be a scalp. But this would have been a really nice trade that's fully according to my model above the minute open. And so now the 5-minute chart, you see we have that small consolidation where we run up above that short-term consolidation range inside a 5-minute fair value gap, and then we run back below. And I'm looking at it right as it's running up there, and then I'm thinking, okay, we could see shorts, but you know what? I'm not going to try and chase it. I'm going to go back to the daily chart, finish doing my weekly prep, or my daily prep, finish, opening up everything, getting my recording software. That's another thing. I need to get my recording software ready. And that's the whole thing, So, it is what it is. All right. So anyways, I then saw it come down beneath the London lows, and then I'm like, okay, we can see a retracement into this range. It's not moving past it with speed. It's kind of meandering around down here. So when I saw this candle reject higher, I thought that maybe we would continue going higher. I was buying this strength, and this isn't my model. My model though did come when price dropped right down here inside this long wick, 50% of that wick. Right, you measure 50% of that. I should have shown it. and then on the 15-minute chart it hits it. As it's creating that initial drop where you might try and this initial run higher, which you might try and long, which I did. I got manipulated on this one there, and then it drops again to take out the people who had long from this low all the way up to that high, right, where I got manipulated. And so I realized that I got manipulated, and I didn't try and revenge trade and reverse it the other way. I stuck with the same idea. I saw something that now was really my model. I had not taken my model at the first trade, but now my model was there, and so I didn't take it with more leverage. I took it with the same leverage, which was the lowest leverage, 1 micro, because I wasn't comfortable trading early this morning, and it was a little scary, at the beginning. But I the way I handled it was, you could probably tell I was maybe a little bit worried, but I tried to handle it by audibly speaking through the trade and talking about what I should be focusing on and what I should be thinking, and it really helped. And I'm glad that I was able to hold it all the way to the high up here, just that high. And it retraced. I wouldn't want it to still be in after that high, but even though it did go higher, and I could have had a stop loss, beneath that low, and it would still worked all day. But I again, right, went for just the low hanging fruit. This is what I'm looking for. That low hanging fruit, the first objective where I can get out at, where I know it's gonna hit it. And this is a trade that if I had went down to the lower time frame and I had my recording software up, I had the trade of 8 was logged in, so I could execute on the trade. And then I had my weekly analysis was already done, and I had been looking at charts as it's running up above this high, not realizing what's going on as we're trading up here, but actually anticipating this high to get hit and waiting for it and timing it. Then yes, I would have went to the lower time frame and I would have looked for displacement. I would have seen this displacement, quick trade into it. That would have been a really nice short. 20 points stop loss, just about the fair value gap high. This fair value gap should not get filled as it's crossing beneath midnight open. Now midnight open is the same price, and it really runs lower for lots of points. Maybe held it till the week opening gap, and yeah, the yellow area, and that would have been like what 64 all the way down to 10. Could have been about 50 points. That would have been really nice. But trades like that will happen all the time, and so I'm not worried about missing out. But here's the trade I took. That one, the losing trade was I was longing up here on this fair value gap, and it came down and stopped me out at around that candle there, and then it continued going lower. And so I didn't get stopped out and go back in right away. I waited, and I saw it go lower, and when I saw it reject this low there inside that fair value gap, I said, okay, it's gonna go higher. And I got in for a turtle soup long, put my stop 10 points just beneath that low. I shouldn't really want to come back, and it did start using these down close candles as support. It trolled me, almost got to take profit, left a big wick, moved sideways, and then we ran up above these highs there. So I was back at positive. The good thing I realized too about that day is that when I took that loss, it really didn't make a difference. Like I couldn't tell the difference in my P&L, in my account balance. I looked at my account balance and I could not tell the difference. So if I take a $300, $400 loss, it's significant because I'm only trading $25,000. But I think there's really that when I was trading one contract, but now I'm trading like 2-3 micros. Like the losses, just especially with 1 micro, the losses don't mean anything to me because it doesn't. I don't realize even that I actually lost money. I just see it as a mistake, and I see it as something that can be corrected. And so I study to see how I can correct it and how I can prevent myself from doing those mistakes again in the future, or at least reducing the frequency at which I do those mistakes in the future. And that's for a large part why I kind of scoff at when people talk about how you will have losing streaks, you'll have losing streaks will happen. It's inevitable. These people are not trading algorithmically. They're not trading based on what will happen in price when it's obvious and 100%. They're trading things that may or may not happen, and when it does happen, they won't be able to tell you ahead of time when it will happen and when it will happen next. They're just submitting themselves to price, and this is why they'll have losing streaks. I'm submitting myself to time, and I wait for time to show me my model because I know it will be there, and that's all I submit to. As long as it's time, then I can make money every day, every week, and it'll never stop. And I think, especially ICT made that pretty clear in today's live stream. But I've had many discussions with traders about losing streaks and how to avoid them, and some people just think they're unavoidable. But I personally, I say if I get more than 3 losses in a row, if I get 3 losses in a row, I usually start to think about taking a break because something I'm doing wrong and I have to figure out, or maybe the market, the way it's moving, it's just not my favorite, my best conditions that I can perform in, and I have to take more time to study them and wait till the market. I'm more comfortable in the way the market is trading. So that's it for this week. I don't think there's anything else. And hopefully everyone had a good week. And good luck next week. I will be doing another one of these every weekend. And yeah, that's it.